Hello traders, today is the 17th of April 2013 and the time in London is 34 minutes past 2 p.m. In New York 34 minutes past 9 a.m. A happy day trading to you all. The title of this video is A Day Trading Like God. Alright, let's get started. Before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Alright, I'm looking here, okay, they're trading like gold, trading for us. Alright, so we have here the Euro Canadian dollar, okay, right here, and I'm on the hourly chart now. My strategy is first to sell this Euro Canadian dollar, okay, and then to buy it again. So I'm going now to the 5-minute chart, okay. What I want the Euro, this Euro Canadian to do is to go down first, because if the price should go up, the price must go down first. So 1 second please, I prefer it to come down to this level, okay. And to give me a clear-cut signal right here, all right, a clear-cut buy signal here. So we are selling it now, so we will prepare it to go down nicely without any trouble to come here and to give us a buy signal right here, okay. If you receive a buy signal here, I will show you my targets, okay. If you receive a buy signal here, I will be very okay greedy this time. Going back again to the hourly chart. Day trading, okay. Apologies to traders for the pop-up, okay. Waiting for my screen to come back. I hope I haven't lost my internet connection. Alright, hold on please. Euro Canadian dollar, that's the one on the hourly chart. So bring in my lines, okay. If I receive a buy signal, okay, I will be very greedy, and I will be expecting the price to continue to move and hit this brown line right here. In fact, what I will do on this hourly chart, I will put my spotlight there for my greedy, okay, target zone, provided that I receive a buy signal. If I do not have a buy signal, there's nothing I can do. All right, so that's it. So this is my target zone, very greedy target. The price now at 134.86. My target zone is at 135.50, more than 60 pip. But what I'm doing first, a bit risky trade I'm doing now, selling this. Go again to the 3-minute chart, okay. Selling this Euro Canadian dollar, and I'm expecting it to crawl it down to this spotlight here and to give me a buy signal. And if I receive a buy signal, I will take it and I will, okay, manage the trend, allowing the price, okay, to come to my target zone near the brown line in the zone of 135.50. By the way, the Euro Canadian dollar is a very volatile currency pair. And you need to, if you are a new trader, you may stay away from this. This is very volatile currency pair. And the Canadian, Euro Canadian, anything connecting to the Canadian dollar is volatile due to crude oil, okay. Why I set my target to the brown line, because you can see here, I draw some line also here. You can see the price turn around minus 180 degrees from here, going down. In fact, what I will do, as we are doing this now, okay. Alright, so the price start going down, okay, from here, going down, and it turn around minus 180 degrees, return to the same place. Alright, and then because it return to the same place, we need to pay attention. It's a very important point. Alright, so we need to pay attention carefully, and it really was a bit of a correction here, so to speak, in relation to this tall candle here. And then the price start moving up. You can see that we have a 5 wave here from this point. First wave, second wave, third wave. And in fact, right here, I'm using an earlier wave, though we are using trading for us. Okay, using one trading strategy, I'm not forgetting okay, everything else that I know before In fact, the fourth wave is right here. That's what I'm drawing here. It's a bit complex fourth wave. Price went down, price went up, price went down. Okay, 1, 2, 3. That's the fourth wave. So first wave, second wave, third wave, 1, 2, 3. That's the fourth wave. And we are expecting now the fifth wave to continue to bring the price to the target zone near the the brown line right here. All right. You have to understand what the price has done before. You can see that right here the price was going down. All right. So price was going down. Looking at our left-hand side, following the guidelines of area wave, price was going down, and then we see a consolidation. Price slow down first. Instead of continuing the bearish progression, the price changing direction. Boom. Price run fast, quickly, very fast, run very fast, and hit this level. You see this portion here, why the price stopped here, because of the resistance here. The market was acknowledging that level, and the price ran very fast to this point. And then it slowed down again. Now, we are expecting another impulsive move, which is now divided into 5 waves. So we are expecting the 5th subwave of this wave here, the longer wave here. We are expecting the 5th wave, the 5th subwave to bring the price here. But before that, it will be nice for the price to go down first, because sometimes the high frequency traders using their stochastic on the 10-second, on the 1 minute can just mess up a beautiful setup, but there's nothing we can do about it, and they just carry on doing what they want to do. All right, so we'll see. All right, so it's coming down nicely. We see what is going to come here. Another thing I need to mention to traders talking about day trading like gold for the Euro USD. 1 second, please. By the way, for those of you who are new to us, we are the TSTW traders. Euro USD, what we want the Euro USD to do, which I was watching for some time now, a bit of blah 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 in this market. Sometimes waiting for my data. Come on, euro. Okay, so Euro USD, we want the Euro USD to go down to 13100 zone. Okay, that will clear all the doubt, all the hesitation. Okay. So that's what we want the Euro USD to do, slowly but gradually, without any resistance, to just go drip it down, because the price was going down nicely to the target zone in the zone of 13100. Price hit this level. Some trader, I mean, this is a profit taking, but went a bit too far. Okay, went a bit too far. All right. So now we will see. Now New York is open. We want to see whether they will allow it to go. Okay, go down nicely to 13100 zone. Hopefully, high frequency trader will not start buying here, because for them everything is double bottom, everything is double top. So as soon as the price here, computer recognize this level and say this is a support level buy, or this kind of thing going on in this market. But that's it. So hopefully they will let it go to 13100, because myself, I want to buy the euro in the zone of 13100. We sold it yesterday because it was a convergent signal. What is a convergent signal? If you do not know, go to www.stochastic-macd.com to learn what is a convergent signal. Here on the green line here, okay, we post. Okay, I was talking to traders on Google Plus yesterday, highlighting this green line. Say the euro is in a target zone coming down. And this morning we are recording another video relating to the Euro GBP. Euro GBP, where are you? Keeping my eyes on the. Hold on, please. Check this Euro GBP. 1 second, please. It's coming up. A bit of what's going on here? Or should I shut down my? Okay, this is the Euro GBP. We are on the 5-minute chart. Now a bit of I don't know who are these people trading this currency. A bit crazy traders here. Yes, it's bullish, but there are but the price. This is what we don't understand sometimes. Trade. I mean, a lot of some of the market participants. I mean, the way they trade sometimes is so. I mean, sometimes it's scary the way these people trade, because they just jump. It's like they jump on the price and they just say, "Come on, you know you're going to go up now." They just buy everywhere anyhow, and they just sometimes they mess up the market. And if you're not careful, these people can even mess up your trade. Okay, everybody knows it's going to go up, but it must come down a bit more first. All right, but these people, they don't understand those things. But well. So, what we want the Euro GBP to do, without any complaint, all right, we want the Euro GBP to roll it down. Why? Because it's at a convergence point. We talk about it also on Google Plus today. Here, all right, it's at a convergence point. We want it to roll it down, be like the Euro USD was going down this morning. All right, we want the Euro GBP to pull back again fast, and we all know we should buy, and we will buy it again. But sometimes some of the market participants, they are just one direction, permanent bulls, and they don't sell anything. So when they are buying, they are like aggressive, very aggressive. They say, if they see the price going down even a little bit, that's why they have all this high frequency on the lower time frame to pump the price up with the stochastic, all these things. But it's just pointless. I mean, if the price is going to go up, the majority of market participants will know and they will buy. If it's going to go down, they will know. So there's no point to try to just distort the market anyhow. So we will prefer enough of my blah. I mean, so we will prefer it to go down, all right? To go down, substantially to go down. But let's go to the hourly chart and see what's happening there. Very friendly time frame. Probably Java. My Java is again. 1 second, please. 1 second, please. 1 second, please, traders. Okay, 1 second, please. I don't know what's happened with my software today. Well, there's nothing going on here. Have I lost my well, finally, apologies to traders. So what I was saying to you, Euro GBP, we wanted to, okay, slowly but gradually to go down. I was changing time frame, and I don't know what's happening here. Let's see, this time you come up or not. Waiting for the hourly chart. What's going on here? I have had a screen here, everything is working perfectly, but I don't know what's wrong with hey, yeah, finally, yeah. Take a bit of time this now. Well, so now what I was saying to traders, okay, we see that for this, you see this, you see there was this round button on the hourly chart, and then the target zone is the turquoise line, the price in the target zone, but there's another target here in the zone of 8648, and another target above that because it's bullish, all right? So a lot of traders that knew that it's bullish, and they don't want to bring it back. It must come down at least to this zone of 8580, okay, at least somewhere here in the zone of 8580. That's what we wanted to come back to, but a lot of people are just forcing it now to push it up more straight away. Sometimes you see a gorgeous pattern like this, and then the people, the way the market is with all this crazy, okay, everything is double bottom, everything is, see, yeah, there you see, it's okay, this is double bottom, you have to buy. If you put a stochastic on this, you see what's going on now in this market. I'll show you in a second. See, if I'll change my setting to 833, that's my setting now. And I want to show you where we are recording this video about day trading like God, and I want to show you how some of the computers are taking orders in this market. I think these people, I mean, they need some help because you can see here, I will go instead to the 1 minute chart and you see what's going on in the lower time frame with the stochastic. All right. Still, every time I have to wait for the data. This is the first time I see this, you know. So now you see on the 1 minute chart, what we are seeing is that usually the computers are taking orders. These are not human beings taking these orders. These are programs, okay, taking these orders. And they use the stochastic and they use also MACD, all right? So in fact, what I'll do, I will also show you MACD here. Very quickly, I'll show you MACD, what's happening on the lower time frame is this is the standard MACD. So on a 1 minute chart, when MACD is below a signal line, the computers will sell. As you see here, it will sell like this, all right? And MACD cross above it, also on the hourly, on the 1 minute chart, they will buy, okay? Now, if you want to trade like this, it's up to you. It's up to you. You can trade like this if you want to. But I don't trade like this, and I find it sometimes annoying because sometimes the price do to go up or go down, and these people will be playing this game with their stochastic, their MACD, and they will delays. Okay, your profit as a day trader, I don't have the whole day for this, and sometimes these people can mess up your trade. All right. Now you will see even on a 10-second time frame, they do exactly the same thing on a 10-second time frame. All right. So now like this, you see, also they do the same thing with the stochastic. Okay, playing the stochastic, the computers are taking order with the stochastic, and the program is designed in a way that if the trade is in profit, they should take a percentage of profit. So if they have a 10-tip profit, they will take maybe half of that profit straight away. So you see the price will go ups and down like this, and just because of the stochastic, okay? So you see, especially the MACD on the 1 minute chart, anytime MACD is crossing like this, the computer will buy without any consideration to the higher time frame, whether we are at a resistance level or not. And if a lot of big market players are using this kind of high frequency trading tool, there will be a lot of distortions because the decisions were not made according to the price pattern or the market principle. They are made according to what the stochastic and MACD are doing. And this will create a lot of problems. And one time, believe it or not, this we can crash the market. The more powerful market participants get into this game, the more trouble, okay, will come into this market. But we are not here to tell people what tool they will use, but we can say what we think of what's happening in this market. All right? Okay? So this is the euro pound dollar currency pair. So we want it to come down a bit. So, all right? So another thing also talking about the high frequency traders is that they use also divergence. So especially the stochastic divergence, okay? And the computer will sell it straight away. So if you want to trade like that, I mean, now you know it. I don't trade like this, so that's why I'm talking about it like this, okay? All right. And this is, okay, so we will see whether they will allow the Euro GBP to come down because also the computers are also using the algorithm trading software, are using these the algorithm computers are using also the trend line, the support, so sell at resistance. So the price, if the price is at the support level, like on a 1 minute chart here, okay, so price, the idea is that the price above, okay, so the idea is that price above a primary trend line, okay, price is above a primary trend line, okay, and then price pull back to a support level, that's a buy signal. You understand? So the price must be first on the primary trend line or the rising. You understand? If you go to www.stochastic.com, check the trading zones. The computers are using the trading zones. So price above a rising trend line in a bullish zone, and a price pull back near a support level, the computer will buy. All right? That's what's happened. Okay? What's happened? Okay? So the computer will buy, price rising, price approaching the first and nearest resistance level, the computer should take some profit. So you see the price will come down a bit. So all this kind of exercise, and you see it straight away. Another thing, you're also talking about the high frequency traders, because it's part of day trading. The high frequency traders are day traders. So we are talking about day trading like God. You want to understand what other day traders are doing. Another thing they are doing, because the price, sometimes you see the price will come near, suppose the price coming near 8500. Very often the price will go to the round number, because the computer will prefer the price to go to the round numbers, 8500, 8600, and 9000. And sometimes the price is not supposed to go there, but you see the computer will push the price up to the round number before they will take profit. All right? So, all right? It's important that you know if you are a day trader, okay? So you see a kind of high frequency taking place here. So stochastic, you see, is a bit bearish here. All right? And the price went up a bit. This is divergence trading. So now you see they sold it here. The price now at support level. That's take profit. Now take profit and at a support level. Okay, you see here, take profit here. The computer will attend. Now the stochastic also is oversold. They will attend to buy. If MACD start going down, then another program will sell. So MACD is now below signal line. It has become very interesting because there's a conflict here. One program will decide to buy, another program will decide to sell, but we'll see. See, so stochastic first. All right, okay. All right. There are other ways these high frequency traders also are trading, and they use also the moving averages. Okay, price below moving average 20, a declining moving average 20. Yeah, sell. Okay. All right. You see now. Okay, I'm going to move my indicator down because I don't really need them, just to highlight what's happening with our high frequency traders. Going now to see the Euro USD, first Euro Canadian dollar, because well, gorgeous. Look at that. Look at gorgeous. Look at this. Beautiful, isn't it? Now, the D below, they were very, very generous here. The D below my key level. So, in fact, it's great. Very good. All right. So, it's good. So, we'll see now whether we're going to see some higher low popping up on this chart. And that will give us a better entry point where we can buy this. So, this was a nice one. Okay. Okay. Now, I'm going to draw a bit a line like this. You can see the trend line. This one, this point, and this point. And I will color it now. Okay, green. Okay, green. And this trend line, and some traders start buying here. I won't buy like this. Okay, I will leave it like this because why? There's other support level here. You see, there's other support level here. The price came all the way here, the support here. So I don't want to buy here. I will prefer it after it finds support above this level to give me. I will take the first higher low above the bullish trend line. That's what I would prefer. I will not be the first one bringing it up, only to see them dumping it again. I would prefer to bring it out first and to give me the first high low above, okay, the bullish trend line. But so far, gorgeous, okay? So we just wait now and see whether we will receive a buy signal or not. We will not try to force it, all right? It's not because we want to buy it, so we must force it. There's no point, all right? By the way, though I'm criticizing high-frequency traders, they have a right to trade like they want to trade and make money, okay? But distortion, it does not help the market at all. That's what I'm saying here. And this program, I mean, I will be happy even to design better, okay? Better trading system for these people, and that will not allow them to mess up the market like this, all right? So, this is the Euro USD. As I said, I want it to go to 13100. 1 second, please. Checking something here. Because I have another screen here. Okay. I'm still here, traders. So, we are talking about day trading. And you can see that though I'm on this, okay, lower time frame. I didn't make my decision on this lower time frame. As I always say to traders, the euro is very good today. Look at that, beautiful, going nicely to my target zone. Let me take some profit here before. I don't want to be the last person out. All right, good. So I consider the euro down because, in fact, It went down to 13109. I consider it down because what's happened. I'll go now to the 10-minute chart I want to show you. Okay. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. So what usually takes place, because the target zone is 13100, which is right here, some trader will start buying straight away. These aggressive buyers, they will place a trade 10 pip before the target, start buying straight away. So myself, I will come off like I came out now, 10 pip before the target. Okay, I've said this before. I don't think traders will understand today. There is one important data coming out today. So, okay, all right. So it's relating to the dollar. So a lot of smart traders that were buying the euro before are very, very conservative now. Okay, now done. Okay. Apology to traders waiting slowly now. 1 second, I'll remove my software now. I was recording a video. I need to wait. That's it. It's done. All right. Okay. Now, 2 minutes in here. All right. So the one I want to talk to you about is this one here. Is this? Where is it? Now, before that, we have a crude oil inventory because today is Wednesday. So if you are a day trader, every Wednesday, 10:30 Eastern Time, 3:30 p.m. London time, crude oil inventory. Yeah, very important economy news for traders that are trading currencies and, in fact, stock also. All right. So this news here at 7 p.m. London time, 2 p.m. Eastern Time, the beige book. All right. Beige book relating to decisions by the Fed due today. Okay, this analysis is used by the FOMC to help make their next decision on interest rates. Okay, it's released 2 weeks before the FOMC meeting. All right, so here very important economy news. So you can understand why a lot of traders that were buying the euro were trying to come out. They were taking their profit now to avoid being the last person out. They don't know what's going to be in this beige book. Okay, so this is it. And also the crude oil inventory due very soon. All right. So the forecast also for the crude oil inventory, sometimes some speculator will start because it's okay, the forecast is higher than the previous figures. So this is in fact bearish for crude oil. All right, because if you have more supply, okay, the price will go down. Yes or no? All right. You have more supply, the price will go down. It's the inverse, in fact. More supply, what I mean, more crude oil. If you have more crude oil, all right, if you have more crude oil, the price will go down. If you have less crude oil, the price will go up. That's what I'm saying. So if you see like this 0.3 million, that is this one 1.2, so which means you're going to have more crude oil, okay, all right. This may affect the price may go down. If so, what you need to understand is that if you have less quantity of crude oil, the price is likely to go up. If you have more quantity of crude oil, the price is likely to go down. But do not trade the new, do not use this for like a trading signal, but just be aware of it, okay? So you can make excellent decisions. So traders are watching this news, and you must do the same. So let's go now and see. So euro has fulfilled the game and even exceed our expectation. Now, same thing again. I'm just going to be patient now. So you're going to ask me why, George, you want to buy the euro, or why were you selling in the first place? Now, as I explained to you, the euro was in a target zone, which you mentioned yesterday in Google Plus, the green line here. This was a convergence signal. So the target was at 13100. As I told you at the beginning, some people were wasting time here. I hate that. But thanks God, they didn't mess up the trade. Finally, they realized that they should sell, and the price is now at the target zone. But in this scenario, because there are some important news today regarding the beige book, we may see the price rolling it down all the way to this point here. So there's no need to rush, okay, and start saying that it reached the target zone and boom, we buy. No, we don't do that. All right, we will wait patiently. All right, patiently. All right, now where are you? Euro Canadian also was in the target zone. You see some traders start buying before myself. So I'll go now to the 1 minute chart. Is that where I was? Okay, you see that our expectation, so we were here before, they continue to sell big time, because if we're talking about Euro Canadian, we are talking about crude oil. So you need to be very patient. You see here, some traders that were aggressive here, you see. Now it's holding it down big time, all right? Big time. Okay, we leave it there. We leave it there. Okay, now we go now. I'm looking for the Euro GBP, okay, Euro Pound. All right, you may say to me, George, okay, how about stocks? It's the same thing, all right? The same strategy. It's the same strategy, okay? Euro GBP. All right, as you can see, it's rolling it down. All right, we're rolling it down. In fact, go back again to the hourly chart. We want it to roll it down properly, all right? Not to be sluggish or sloppy or whatever. So you see, it's not bad. It's not bad. It's going now at least to this level. So it's now, I see, if it's 10 people before the target, I come out. Okay, it's already 10 people before the target. I want to be a bit greedy, and then I'll take my profit now. Okay, had enough of this. It's not very friendly. I mean, sometimes this can be very funny because of the Euro USD. It's following the Euro USD like okay, dog. All right. The poodle is the poodle of Euro USD. Okay. 7 pip away from it. Come on, guys, put it there nicely for me. Do you talk to the chat also? I do it sometimes though, but the chat does not listen. So put it there. Come on, guys, put it there. All right, that's it. I'm out, guys. I'm out. Close this trade. Done. I'm out. All right, it's not too bad. Not complaining. Okay, but in my view, this thing should roll it down more. We'll see. In fact, go again to my 3-minute chart, and I will be watching it carefully. If there's more opportunity, I will sell it again. So I'm not happy about this because. Should roll it down more than that, okay? Okay. So you see now, I mean, I don't know. I've been talking to you now for how long? 32 minutes. So I mean, that's it for day trading, like God. Okay. I hope you have learned something from this video also. If there is something more, I may post the second part of. Day trading like God, okay, and this is it. So the first thing that we are looking for is to look for a setup, okay, setup, and then the signal. Wait for the signal, okay. When you receive the signal, don't enter the trade on the signal time frame. For TSCW24 traders, first best time frame. Do not fight the first best time frame. Or like I'm doing now, you are paying attention to the price shelf. Okay, if you are more advanced trader, pay attention to the price shelf. If you want to sell, you are looking for the first, okay, lower high, all right? And if you want to buy, you are looking for the first higher low. So as I'll show you now for the Euro Canadian dollar, I told you that I draw my green line already, my trend line. I don't want to chase it. I would prefer it to go back above that green line and to give me, okay. Now I come out, these people are bringing it down more. Okay, you see how selfish they are? Anyway, and to give me the first, okay, higher low. Okay, now, so we say the setup first, the setup is from the higher time frame. Okay, so we want, if you see, for instance, very often today are looking for signal or they scan for signal. So you scan for your signal, okay, you see a signal. Now you must verify where this signal is coming from. Where is the origin? Where is the source? What is the source of the signal? The source of the signal is the setup. Okay, good. So you will now check the setup. Is it a valid setup? So you see a bullish signal. Was it generated by a valid bullish setup? That would be a good question. The valid bullish setup may be a market pattern, all right, a bullish market pattern. Very important from the higher time frame. But Then you check the signal. Is that correct? Is that the entry point? Sometimes, especially for the single red and the single green signal, what we have noticed sometimes, trader will enter the trade and will violate, okay, the key element of the TSCW24. I see very often. Check it again, the single red and the single green signal. A lot of TSCW24 traders are making mistake when they are trading the single red and the single green signal because they are entering the trade too early. Because the TSCW24 to enter the single green and the single red, you must wait for something to happen first before you will pull the trigger. But very often trader will just force it straight away and they get into trouble. All right? Okay. So the signal, now the entry point. So the setup time frame should be different from the signal time frame, and the signal time frame should be different from the entry time frame. All right, depending on which trading tool you are using and which trading system you are using, that's how it functions. Now, when you are about to enter the trade, what do you look for? So suppose I want to enter the trade here, which means I'm going to risk some money. To earn some money, I want to consider the risk-reward ratio. How much am I going to earn in this trade? If it's not worthy, I may stay out. It's not because I see a setup or I receive a valid signal, then I should take the trade. I don't have to. If I notice that I'm going to risk a 50 pip, or you are buying a premium for £500, and you're going to earn maybe £100, is it worthy? It's not worthy. It's not worthy. All right. So you want to consider how much. It's like somebody say to you, give me £100, and I will give you £50. Or you say, yes, I'm going to earn £50, so I'm willing to give me £100 because he's going to pay me £50. But he's not going to give you back his £50. In trading, yes, you will get it back, but how do you know you're going to get it back? If that trade fell, it means that you give £100 to get £50, or you lose altogether. So consider the risk-reward ratio when you're about to enter the trade. But the most important thing, consider the risk. Is it too much risk? All right. Sometimes it may be the risk-reward ratio may be nice, but talking about the 5% money management rules, your trading accounts, is it too much risk for your trading account? Are you using, okay, 1/3 of your trading account just to chase one financial instrument? Are you using 10% of your trading account just for one trade? It's wrong. It's wrong. So these are few things you need to pay attention to. So if I see a high probability set up, a valid signal, but the risk is too high, I'll walk away. All right? I'll walk away. I don't have to. But sometimes traders, because they are using a trading system, they will say, this is the signal, I must take it. You don't have to take it. If it's a high risk, don't take it. Also, as day trader, we are checking the clock. The time now 12 minutes past 3. Wednesday, what's coming to our mind? Straight away is the Forex Factory crude oil inventory. In exactly 17 minutes, here it is. So, you see now I came out of some of the trade, which is great. All right, they pay me also, which is nice. So I don't have to worry about the crude oil inventory. I can wait patiently now, go and do something else until the news is released. Let it cool down a bit. All right, you know, the dust to settle after the news, 1 hour later or something like this. And then when we come in gently, okay, gently, because we are entering again the gap period. The first best time frame, the first hours to trade, the first 2 hours when the market is open, New York is open, London is open, the first 2 hours, the best time, okay, to harvest profit when you are day trading. After that, maximum 3 hours. After that, that's why we have the gap period, waiting for another market to open. You need to pay attention also to the closing time of London. Like now, at 5 p.m. London time, which is 12 p.m. Eastern time, London will be closed. You need to be aware of it. So you will see sometimes London is about to close. The last hours of a London session can be sometimes volatile. And sometimes professional will force it. Suppose they were selling, they will sell all the way to the end of the closing. You have to wait for that hourly candle, okay, to close. Because the market is about to close, wait for that hourly candle to close. Same thing, New York is about to open. Watch the the hour before the first hour candle of the market, all right, to close first. So you will see it, okay, as I'm talking to you now. Okay, let's see. S&P 500 for those who are trading stock. You see now, this is same scenario, blah, blah, blah. They're all rolling it down. So if a market opens, as you can see, this is the hourly candle for S&P. Wait for it, this candle here, to close first. That's today. Let it close. You see, it's very bearish. So it closed. What can you do? I'll show you now. Okay, I will show you now. Okay, I will show you something that we do. We talk about trading idea part 1, trading idea part 2. But this is something else I can show you now. So you are dating that. You just highlight the range of the first hour of the candle. Okay. All right. In fact, I would prefer the body, but I leave it like this. Okay. So you highlight the high of the candle, the low of the candle, the first hour. So you are patient because you are aggressive trader like a Jibril before. You remember the series of videos that are called Jibril. So you cool it like this. So you wait for this candle to close, and then you highlight what's going on here. My apology to traders today with all the blah 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 from my computers here. So my apology to you guys. So you highlight the high, the low of the hour, the candle, okay, and the median line, and you just monitor it now. Now, from this point, even if there are other things that you can do, okay, TST traders know what they should do. So now, from here, you do that, at least minimum, all right? If you don't want to use trading idea part 1 or part 2, at least that, okay? So I will go, for instance, to my 3-minute chart, and all right, I know, okay, I have too many lines now. So you see, this is, hold on, please. Okay, color this one now. 1 second, please. I hope you like this video. If you like it, like it. If you dislike it, mark it down and share it with your friend, of course, okay? Now, so color the middle one in pink to differentiate everything. Now I'm going to go now to the 3-minute chart, and then and these there you see the line, the turquoise is on top here, the other one is here. The price is below the low of the first hour, so we must watch it now and see what the problem do. The key point I must watch myself, if I see something like this, you see the price rolling down fast. There was this low. If it changes direction here, we don't know yet. It changed direction here. The price must break above the nut and give us the first higher low above the nut before one can buy. But it's not all about starting from the hourly chart. In fact, I will go to the yearly chart. I will go to the quarterly chart. As I said to traders, I'll pull out of the stock market now because the price, it may break above it, yeah, which it's doing now on the yearly chart. But one need to be very cautious because the price is in a resistance zone, right, on the yearly chart. So day trading strategy, that's the best way forward right now, taking your profit consistently without exposing yourself to too much risk. This is the end of this video, and I hope you have enjoyed this video about day trading like gold, and we'll put it to use, okay, to make excellent day trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders. Speak to you soon.